Adam, looking forward to having our discussion today. So I'm making you the presenter. Looking forward to seeing your screen and hearing your voice, and welcome to F.A.C.E, Adam. Adam at Macro Hedged joining us here in F.A.C.E.
He's unmuted.
Okay.
But we can't hear him or see him.
Can't hear you. You'll have a drop-down menu, Adam, for your mic, as well as a screen share.
There's an audio tab. You can select your microphone there because
you guys hear me okay?
Good.
Yeah, we can hear you. We can hear you just fine.
Cool.
Now you can use your show screen button under the tab called Sharing to choose which screen you want to share.
Yeah, I've done that already. You should be able to see my screen. Can you see it coming up?
Not yet.
Oh, hold on. Let me just try it now.
At least we can hear you, so that's the first good step.
That's good. No, I've definitely marked one application that you should be able to see.
Yeah,
there we go.
Now we can see you. Yeah. Perfect.
All right.
Okay, Adam. Thank you, Steve. Adam, great to meet you.
Great to meet you too.
Really appreciate you taking time out of the dollar sell-off today to talk to us, and looks like you prepared a PowerPoint, and I'm very much looking forward to what you have to say because you wanted to do something a little bit different. Before we get to your PowerPoint though, Adam, can you tell us a little bit about your trading journey and how you got involved in the business early on?
Yeah, sure, no problem at all. So I've kind of done a slide for that as well. So I've been trading since 1994. I think my first job was on the live floor. I worked for a Bundar desk, and then I moved over to Goldman Sachs about a year after that. I was there till 2004, so just shy of 10 years. I moved over to the FX space where I was on the options desk during some kind of pretty hectic times. It was just after Soros had the pound had come out of the ERM.
Wow. Cool.
And all. Yeah, so it was crazy times. So I over a period of time, I've spent my time over on the options side. So I came off the spot FX and was running the yen straight vanilla options desk for a couple of years, and then moved over to the exotics. This was at a time, late 90s, early 2000s, when all the exotics were really kind of kicking off, and everybody wanted to be trading those. And there was no set price. You could kind of make a number, and the desk made a lot of money. What
do you think of this, Adam? Options are like relationships. 90% of them expire worthless.
Yeah, but unfortunately, the 10% that don't, absolutely.
You got to go for them. Yeah, I agree with you. Okay, so were you more of an option writer or an option buyer, or use a lot of different strategies on the desk, condors and all those exotic type strategies?
We were an interbank desk that just we were trading
executed.
Yeah, okay. Well, no, we traded everything. I mean, my desk at the time ran the world's largest yen book. In 2001, we made 840 million on the desk. In 2002, over 600 million. So the yen desk, alongside at the time the dollar mark desk and the sterling desk, we were the largest OTC options books on earth. And we had.
It's everything. Refreshing to hear the word Deutschmark.
Yeah, I mean, this was pre Euro, so
yeah.
I left there in 2000.
Will we have another Deutschmark post Euro?
I guess. I mean, you know what? I think there's so much willing and there's so much might behind holding it together. If the European Union does fall apart, which I kind of can't see it happening, without any kind of major, political war unrest, there's too much invested in it, So no is the quick answer.
Okay. All right, buddy. So great background. You were you're blessed to start off there, you know, compared to, and I think that's kind of the motivation behind what you want to talk about is in those days, and you're a young guy compared to me, you had places to go to work. You had trading floors, you had trading desks, and you know everything has been hollowed out by the internet and online executions, etc. People today really have to have a great sense of discernment when they're out there trying to learn how to trade. Don't you agree?
Oh, I think it's a really good point, actually, that Dale. I think it's so strange. I come from I'm 42, but and Goldman said to me, oh, you can't work here without a degree, so I had to kind of work full time and get a degree at the same time. It was a time when everyone did a grounding in a bank, or everyone did a grounding in a fairly large house. It could have been Dean Witter, it could have been any of the big firms, but that's where you did your grounding. And then usually regulation, because you've kind of got an idea you want to do something slightly different, or regulation changes. So you find that a lot of the guys running desks at Deutsche, running desks at Barclays, went off and have now become part of the big non-bank liquidity providers. So you hear names like GSA, FINEX, all of those guys. They were ex-traders that the banks have kind of gone, look, we can't do this anymore, because regulations said we're not allowed to, both sides of the coin, and they've gone off and become non-bank liquidity, and they then have facilitated more and more and more of this hollowed out world where people don't have that connection anymore to kind of. I mean, there's some downsides
to people.
Yeah. So they're staring. They're staring at charts, or there's a very different. What the chart says and what the price says is kind of become this new religion. Whereas before it was, I could talk to you on the desk and you go, nah, if they come in selling, I'm taking them.
Right.
And you would then go speak to your buddies, and then we would, someone in London would say, look, I've got a big order to go, and someone in New York would say, well, I can take it off you, we'll keep it off the market, and that's how it was done. And now that's all hollowed out.
Yeah, but that's why social trading and having a community and masterminding with great traders nowadays is even more significant. And I really am a big believer and proponent of communities. And we only have two eyes, and you put together and attract good traders into your community. You could walk in without having an idea, and by the time Blake and Steve and the other guys are through talking, I have many compelling things to consider. So big believer in that.
Yeah, and the kind of price isolation. I mean, I've got views about technical analysis where I feel it's become, in a way, a means sometimes of just bringing in, people. You can remove a view and remove a community by giving them a chart and then some tools around that chart. And I think that's the bit that's been really hollowed out. There's really good things that go on in technical analysis. There's really good things that go on in price study, but I think the isolation, because people are trying to make it simple, put it on a mobile phone and get people to trade more, though, exactly as you've just said, that community, that block together has just been snapped.
Okay, so how are we going to serve this community today? I know you wanted to address the smaller retail trader, and you've grown weary of reading and hearing all the stories of people just blowing up these $5,000 and $10,000 accounts, which I have done. And, sometimes, and not sometimes, all the time, Adam, in my view, we learn the most from our mistakes. So, but if we could help others, having already made the mistake, avoid the landmines we've already stepped on, I think we're providing a great service and helping people avoid the pain that we've already gone through. So what do you have? What do you have for us?
Yeah, I think, well, that's good. So I mean, if I tab through some of the, start moving kind of through what we're doing, if I go through, I mean, some of this might get really boring and dull, and you can just say, canter on a bit quicker, so that's fine. So what, for me, I think everyone's still got to make some mistakes. And,
yes.
When I kind of did the release with the the guys at Macrodisiac about the cost of trading, and a lot of people said, yeah, I feel like, some people said, I feel like it doesn't matter yet because I'm still trying to do some learning. I don't really care about the true cost because I'm trying to get my head around it. But then there's a lot of people that have already stepped on a few smaller landmines, but they were kind of saying, wow, that's really, really interesting. I think understanding that journey of where people are, or understanding where you are on the journey as a person within the trading side, is really, really important. We lack that. And hopefully I'll go through this stuff of what we're trying to do. I'll talk a bit about macro hedge, talk a bit about some things that are completely different. Please stop me constantly to make sure you're clear and any listeners are clear as well. So I will counter through at a pace, and you can say hold on, or you can say go quicker. Okay, so let's start.
Promise.
Good man. Don't let me disappear away. So, so the agenda, kind of who am I, what's macro hedged, what's our roadmap, some different ways of looking at trading, and a live trade we did 72 hours ago, which I will walk everyone through. Okay, so I set up macro hedged with you because kind of big reasons around it were just really a frustration of people either kind of believing in this really crazy dream, or, oh, if I could do a few trades while I'm doing my job, I can get rich. That's not the case. And secondly, I've got a massive problem with the deleting of trades people have done that have not gone well for them. And so we really did it kind of out of the basis of being as transparent as possible. And we might get completely mullered and lose money this year, but we're posting up everything we do, telling all of our customers, and we're trying to keep us we're not trying to, we are being as transparent as we possibly can, even to the point where we make sure all of our alerts go to our customers before we enter the trade.
Wow. Well, good for you, buddy.
Well,
yeah.
It was painful a few days ago. I must admit.
I kind of share the same thing about revisionists who don't mention things. I mean, isn't it cathartic to say I was wrong?
Oh, it is.
You never hear that on Twitter. I don't know, and I was wrong. Do you see that on Twitter?
Yeah, you never do. Everyone's right all the time, and what scares me is people believe it. I love writing something where we're actually wrong and why we were wrong, and we actually get more feedback from people saying, "Yeah, I understand why you got that wrong. I understand. We were part of that as well, but kind of." The theory was right. We kept the risk to a minimum. That's good. It's okay.
Because it's authentic.
Yeah, exactly. So we've been running macro hedge options since the beginning of the year. That is, there's a lot of detail around the strategy. I'll talk about that later. We put a trade idea out. We do it. We make sure the email goes out to everybody. As soon as we got confirmation from MailChimp it's gone out, we'll pile in and do the trade as well. I broke my heart a few days ago with ES, the S&P 500. I saw the trade happening in front of my eyes, but couldn't press send quick enough. And then after about a month or two, we were asked by a lot of traders saying, "Well, I love it, just too much information. Just give us the directional turning points, which is a different service, which is just completely buy, sell, here's the stop loss, cut out." So I'll show you how.
You know why? They're lazy. They just want money to pour into their account. And, and they say they're self-directed, but, everyone who tries to sell the secret of trading, the secret is it's hard work, living through adversity and persevering. Yeah,
I mean, I've been doing this 24 years, and Hugh and I still work 12, 14 hours a day, and people kind of do these pictures sitting on beaches. It's hard. It's a hard job, and someone said to me, and it's the truest story, is this is the only job in the world where you can't turn up and just not be average. You've got to be at Usain Bolt world record pace just to stay in competitive mode. You can't have an off day. You can't have a hangover. You can't be ill that day. Oh, I don't really fancy coming up to work, or I won't fix so many bathrooms today because I'm feeling terrible. Every day you've got to be Usain Bolt at world record 100-meter pace.
Well, what about when you don't feel good? Isn't it okay when you're not in a peak performing state to do nothing?
Yeah, but because that's 100%. You know, since we set this up, you know, just to share a personal feeling that I have is I spend my life kind of thinking, shit, have I not put enough stuff out to people? But then I sit back and think, I wouldn't be doing this now. But there is this weird pressure in the market that you feel like you've always got to be doing something. And we lost some customers and we've made really great money, and a couple of guys unsubscribed. And I said, oh, you know, what's going on? And they said, oh, not enough trades in the day for us.
Yeah.
What?
Can't please all the people all the time, Adam. You know, you just
you can't. But it's really interesting what you say.
You know what I say? Like, for example, like right now, you're a competitor. I mean, let's call it what it is. You're here. I'm giving you visibility. People could sign up with you, and you know, we don't have any issue with that, because if people want to go somewhere else, and you could, you know, do a lot of intelligence gathering with a lot of different services, they need to have a different experience. So it's okay. So you know, we're here to help the general FX community as much as we can, and we do it for free here and bring in guys like you to edify them. So so don't worry about you know, the revolving door. The key in the business is to slow down the revolutions, but it will always revolve, right, bro?
Yeah, it is. It's always revolving. It's just
the search for the Holy Grail for some people is like Don Quixote; it never ends.
Yeah, I think my frustration kind of sometimes is just it's the laziness, and we're in an industry where everything is you're up against guys that have, you know, got a 3.9 plus GPA, that have been to MIT, that are working in 5 or 6 different funds, that have got unlimited budgets. And for us, for you know, whether it's my role market making options, or my role trying to you know, correctly predict flow for the customers of macro hedged, I've got to be at my best game, because I know those guys are already better than me. So if you're kind of further down that chain, you've got to be fitter, sharper, more mentally. There's more work to do, not less. And that's I'm glad you appreciate that. And that's it's just, if we can remove that laziness from traders, wow, the trading world would be a much better place. But anyway, we digress. I shall keep going.
Okay.
All right. So what I've got up now is our roadmap. A bit of a plug about what's coming in the future. So we've got a crypto skew platform we're going to be released, so that we can start to see. This is totally unique. We're using our options models to predict when the turning points in any of the cryptos will be coming out. I'm not a big fan of cryptos myself, but this is really good. We're building a genuine turning point sentiment analysis of Twitter as well. So it's not like all the usual stuff where people are talking about levels. We've got some really good secret source from a guy that we used to do some development in Belgium. We're going to do an institutional only piece. One of the things we've had, which is quite a funny story, is institutions and trading desks have come to us and said, we want to use it. We've seen what you've been doing, but it's just too cheap. Can we buy it for 2 years in a block? Because we can't spend that little on a card. So we're going to do an institutional service. We're going to do a macro money maker newsletter for traders, you know, purely for FX and futures traders, so that each week they get something that they can print out, have on their desk on a Monday. These are the things that you need to be looking at. These are the key turning points in the options market. These are the kind of key levels. I've got a few slides where I walk through that. We're going to be embedding completely with Quick Strike, who, you know, if you trade FX, if you trade futures, you know, those guys are, in my opinion, are second to none in their data quality. So next slide. We kind of talked about this before, is you know, why am I wasting my time with this? I get asked by a lot of people, why am I charging $30 for something and wasting my time with retail? And we talked about this earlier, Dale, where it really, for me, it's just trying to be as transparent as we can, be as open as we can. I know you guys are doing the same thing, and trying to put forward that this is a really hard job. This is not a get rich quick scheme. This is going to take you way longer. You know, when somebody cancelled and saying, oh, you've only made 10% in a month, you know, I need to make 100% because I'm trading full time. I mean, just my head explodes with that stuff, but I have to remain calm. So that's kind of why we're doing it. We have got a lot of people in the background that are doing things. I'm not, I'm kind of still running a market making business, which it takes up a lot of my time, but we've got people in the background that are helping coding stuff. Another big question, which people can press, we won't dwell on this, but people can press pause on this when they want to review it later. Who are we using? Why do we use them? What are the platforms we use? For me, making sure your costs are as low as possible and who you're consuming with is really important. I mean, maybe we can come back and talk at another time about kind of, FX aggregation, ECNs, and making sure you guys are getting the best possible fill. I love that stuff. I love all that technical stuff.
I've interviewed the guys from Trading Technologies.
Yeah.
Okay.
Have I ever interviewed them, or have you?
I have.
You have, yeah. So we use TT a lot for all the futures side. The FX side, we use LMAX and FXall, which is the old Reuters product.
You're my 1,000th and 82nd interview.
Wow. 1,082. Wow. Oh my gosh, that is a lot of interviews.
Yeah. I enjoy it.
Have you ever interviewed the guys from Market Factory?
Market Factory, no.
Yeah, so Market Factory, purely all they do, they are, I mean, I'm not sure how much benefit it is for the retail, but Market Factory are 100%, all they do is they're an aggregator of all of the providers, all of the interbank providers, the ECNs, they stitch it all together. So they are the epicenter of the FX market globally. They've got all the interconnects into all the major backbones. I think it would be nice to talk to them if you ever can get them on. They're based out of New York. It'll be interesting, kind of really enlightening to anyone trading pure FX, just to see how their flow, how their orders are really rooted. So anyway, I didn't want to dwell on that slide, so there we go. Okay, so what the kind of content we want to talk about is going through it. Obviously for us, we see it's very common for retail traders to focus on price. It's the main thing they're taught. It's technical analysis is what everyone looks at, all of those concepts. And then you start to look at kind of the derivatives of those technical analysis, so the kind of indicators, anything from moving average, MACD, RSI, all the usual kind of methods of analysis. And today I just want to talk about something else, so which is what we do, how we do it. Hopefully it's beneficial. Hopefully some people will just go, what the heck is this? But I'll fire through anyway. So what we were just going to look at here is just looking at methods of gauging participant positioning. That's actually something that's quite hard in FX because obviously it's an over-the-counter market, not an exchange market. But we've got the CFTC report, risk reversal skew, which is what's used more by the big players, and put call ratios as well. So first one, obviously the CFTC report. It's free. It's delayed data. A lot of big funds now play it and game it a little bit because they'll adjust their positions knowing it's coming out. It takes time and effort to understand what each parts are doing and to the breakup of it. The options data doesn't always take into account the options delta, which is a big thing. So people say everyone's kind of max short euros, and then you look at the options side and they're actually carrying a huge amount of long puts. And they could all be delta hedge, which is offsetting on the cash side. So there's some real obscurities. And one thing that's quite interesting is one option contract counts the same as one long position in the future. But the option itself, so me and you could go and buy a 10,000 one delta options. It has the same weighting in the report as if we went and bought 10,000 50 delta options.
Interesting.
It's crazy.
Yeah.
Not many people know that.
No, I didn't know that.
Yeah, so we do a CFTC report, which we pump out free to everybody. Anyone listening to the call, welcome to sign up. It's free.macrohedge.com. It's taken we've got all the instructions and the detail as to how we come about with this report, and it just gives a Z-score and a current week on week. So you start to see a bigger picture of what's going on rather than the immediate. Some of these funds can't shift that quick, so this gives that picture where we can start to see the flow a little bit more.
Okay.
Next one is the risk reversal. So if I got a slide where I'll talk about, yeah, I have. Okay, so what's a risk reversal? So this is cable skew. So what we've got here is the little dot in the middle is the at the money, and you'll notice that as we move, if cable moved up, we would expect the volatility. This is volatility on the axis. We would expect volatility to move down. And if cable dropped dramatically, you can see that the tail lifts, the puts lift. So that gives us, if we do this by delta, which is the next slide, you can see a 20 delta call on the right side is a much cheaper volatility than a 20 delta put. So the risk reversal is simply the selling or the buying of the put and the buying or the selling of the call at the same deltas, which gives us this chart here, which is also known as the risk reversal skew. So you can see over a period of time of February through March through April what the cable pound against the dollar skew has done, and you can see
how these turning point signals where you're financing the directionality by writing something against what you're buying.
Yes, well, we trade the skew fully delta neutral. So if we trade a 20 delta risk reversal, if you sell the put and buy the call, you've got 40 deltas exposure. We'd immediately, so if we kept this simple on 10 contracts or 10 million, we would immediately put an offset transaction of 4 contracts or 4 million. We're not interested in, it's a great question, because a lot of people use them at turning points to maximize their financing of the position. So it gives them kind of double bubble. So, and I'll work through
double trouble.
Yeah.
Right.
So if we look, if we look here, on the blue line here, I'm not sure if my mouse is highlighted at all or not, but because we can do this.
I can see it. Yes.
I'm going to pin this arrow here so you guys can see it. So you'll see, oh, I didn't do that very well there. There we go. So this arrow, you'll see that the puts have slowly, as time's gone on over through February into March, that the puts have slowly become more and more expensive, less and less value. And then we've had this big drop here in the yellow of the sterling has dropped off, and the risk reversal has just blown out to 4%. And at that point, that because of that blowout, it's so far out of value that you'd find 2 things occur. The guys looking for the pure trade play is doing what you just said, which is let's use a synthetic position to get into a long right now, and not hedge it. So they're going to get the volatility gain in their direction and the price of the future or the long spot position go in their favor. So they would have in this case, 3% gain in volatility, and the cable's gone in their favor as well. So a lot of people do this. We tend to protect the customer by saying hedge at this point, and we're just looking for that 3% gain in volatility, where you see that's gone from the low in around the 20th of March to where it is now, where calls are starting to come back in, and it's just a 1%. So that's a 3% fairly risk-free play in the risk reversal, which also just it tends to really show when things are overdone. And if you're on a daily FX trader, you want to be looking at those extremes, because that's where the real money is shifting things.
Got it.
Okay, next slide. So our models kind of are looking at a lot of things all the time. This is S&P 500, so you can see that we're looking at intraday volume and contracts. If you look here on this right-hand side one, this is actually the straddles. So it's the cost of buying a put and buying a call at the same time. And you'll notice this little the dotted blue line on the right-hand side is starting to fall away, as quite possibly this move up to 29.20, 29.30 could really fade off quite heavily, as people are happy to sell pretty hard straddles into that area. So you can also look at what's happening in the volume. The one at the bottom right-hand corner, I took this live before we went on. You can start to see now, or they're very cheaply buying up all these puts that are down here, and this is the yellow bars. So our models are looking at that all the time, and that's how we kind of generate our signals, which go out to the customers. We're looking at all of those alerts, all of those metrics at any time. And when we start to see these things outside of any boundary, that's when we're letting our customers know. And it's just really for them on the directional side. It's a very simple. All the research is taken out. We're just spitting out what the model's doing and giving them a trade that's going to hopefully continue to make them some yield. But over a period, we are getting asked a lot. Can you put some more narrative to it? So that we can understand what it is you're doing. At the moment, we feel really, we're not sure yet how to represent that to everybody. So we thought about a weekly update, a newsletter that we could send out so everyone could kind of say, oh, this is maybe a standard deviation away, this euro move could continue, this dollar move could fade around here, and give them that color. And we haven't really kind of solidified it in our heads yet.
So is this your own algo? You coded and it's proprietary.
Yeah, so this we use Quick Strike for a lot of things. We use Bloomberg as well. On the market making side, we've got some algos mainly around execution and modeling, but we start to build up a picture of when, one of the things that a lot of people don't realize is, you great stat around 90% expire worthless, but 95% are delta hedged. 95% of options that are the bulk of them are fully delta hedged at any one time. So the size of the beast is massive. It's not just people buying random calls and puts. And when you start to manipulate that data and look at where exposure is, that's when we can have real, high risk reward opportunities. And that's we're trying this for a year, to see how many customers we can kind of look at and educate them and give them the best possible outcome for what it is that we want to do for 1 year. So we kept the price ridiculously low. It's just, can someone be part of something that's transparent and open and honest? And then we'll see how we are in a year's time.
Have you ever thought or come up with an answer on how market makers, since you are one, are able to pin a market to an expiring strike with the largest open interest so they can just collect?
Well, okay, there's a couple of things to kind of, there's some myth around that, there's some truth around it. So,
okay,
from a perspective of if we just look at market making in itself, it's a passive entity. So my job is to provide a two-way price for 23 hours a day, 5 days a week that anyone can trade on, but I also want to make sure there's the key piece in the end of that sentence, which is to make sure I'm traded on. Because the last thing I want is, if you've got the big order, and I don't want to be the last guy getting filled because I'm going to get ruined. I want to be first. So there's a fight with market makers to always be first, to start to see where the toxic flow is. So that's one thing. So whilst we're passive, we want to be traded on so that we can think, shit, we're wrong, and move out of that position. And then as far as pinning to a strike goes, what happens is, the more and more OI that's going on, the more and more deltas are flying around, and the more and more gamma suddenly becomes available. So if we looked at crude oil as an example, around $65 right now. So there's every single time it dips, because we've got options that are expiring in a few days, every single time it dips, all of the people that have sold, that are holding those puts start to panic, and they're protecting the downside. And what will happen is, every single day, charm, as it's known, which is the decay of delta, every single day, their amount of deltas they've got to hedge increases or decreases, and this starts to create the pinning effect that we all see, and then slowly it pins to a smaller and smaller range because of charm. And then
are you a believer in, like, some of the more famous, or at least personalities in the options business, just go with when they see unusual size and trading volume? Is that a market tell for you too, Adam?
So around, not talking about stocks, just sticking to our world of FX and futures.
Oh, okay.
I'm less reactionary to that big type of flow, because it could be something that, at the end of the day, let's give you an example, right? At the end of the day, if I've got loads and loads of short Vegas, I'm short loads and loads of options, I would have to go in and buy far out of the money wings, let's say 5 delta, and I'll buy thousands of them. And then someone said, oh, that's a large trade. It's not really. Stocks is very different. Independent stocks, when big flows going through, I feel potentially there could be some opportunity there, but I'm not a stock trader. I haven't traded an individual stock in 20 years.
Okay.
But the big flows.
Good answer.
Yeah.
So it works in individual issues, but in broader instruments, it could mean a million things.
It could, yeah. I mean, it could be that you've got a massive short euro position, and you're going away on vacation, and you're the main fund manager, and you just say, "Buy me some cover while I'm away because I'm slightly worried about this."
Let me ask you this: when's the last time you took a vacation? Took too long. Took it too long to answer.
Yeah, it's true actually. When did I? I went to Iceland about a month back. So yeah,
okay, good for you. All right.
I do try and get away. I think clearing your mind, reading books. Otherwise, this job just grinds you down to you're a smooth pebble in the ocean.
Just call me Pebbles, man. Anyway, okay, cool. So
let me keep going. So I won't kind of bore you with the implied volatility slide. So this was a trade sample that we put out.
No country for gold, man. Good. Yeah. I like that. All right,
this is what you get for your $40 a month. So we put this trade out a couple of days ago. We kind of think this run up in gold is done. We were expecting a little spike, and we were going to sell into it. I'll show you how we did it. So we send out some background. Here's the chart. Everyone's got that. We looked at the kind of the moneyness curve, and if you look at all those calls there, just everyone's panicking about calls and they're overpaying. Yeah. And you can see those puts getting suppressed. So we thought that the value play here is looking for a potential sell-off, and puts are very, very cheap to get involved in. So we also looked at the risk reversal. Well, and you can see there's on the far right side there's a little spike back up, which I think will get faded back down. So this could be the right time to get into a limited risk strategy. But we wanted to make sure, how's our model looking overall within the macro picture. So we've got, we look at inverse correlation back to yields, and you can see, gold's had a very kind of long term.
That's a great point, because a lot of people are asking me, well, why is gold down with the euro being steady and or stronger? And I said, well, why was gold going up when the dollar wasn't going down during that last bull move from 1160? So this is a tighter correlation yields than the dollar, isn't it?
Yeah, absolutely. It's a very, very tight correlation.
Right, that's a pearl.
Yeah, and it's a real headwind for gold bulls. So we will always try and back up some macro thinking around the trade. We then look at what's 10-year real yields doing. We've got a recent spike, but they've come off considerably, which kind of also solidifies the trade. And then gold implied volatility is just being crushed. So the blue line there, it's into significant lows, even though all those upside calls are the panic area for everybody. But volatility is cheap to get into a trade. So how can we maximize the amount of money we want to make, but minimize the risk, as everyone always asks each other? So we looked at what we call a short ratio spread. So what we do is we sold a 1320 puts, and we bought two 1300 puts. Cost us $3. So per one lot was $330 a unit, and we were risking 3.5% of our fund on that trade. And as we move forward, you can see the payoff starts to, if we, for us quite quickly, if we move down to the kind of $270, $280, when you're short a ratio spread like this, you can see on the far right of that chart, our maximum loss is very small, and our maximum upside is unlimited. They're very nice plays to do that, and our customers like them because they don't need much hedging, if at all. And we try and keep the availability of the option for a number of days. You can see this one's 77 days till expiry. We'll be dumping it out way before then, because all of the theta burn, the time decay, happens in the last 30 to 40 days. We'll be out long before then. So it's a very low cost way of getting into a position.
Okay.
That's the trade there. That's the actual order we put through, so that's where it is right now. So we bought it at 3, and it's already doubled in value. So as you see, it's 6.3 at the moment.
Are you a believer in partial profits?
Yes. So for us,
like a double, and take half and let the rest ride.
Yeah, we do sometimes. I mean, this has made a lot of money quickly. So it's up kind of 50 grand in 2 days.
Yeah.
So we will. There's not much burn in the theta for the next few days. We think gold's got another maybe $10 on the downside down to the 1280s. We'll take some off then and lock it.
Under there it looks like 1250, 1240 to me. Maybe even 1220. Exactly. What do you think?
Yeah. Exactly. And I think after that it's kind of runner. So it's really difficult sometimes. It's not a bad thing to kind of finish the slides on and wrap up on, is that I've struggled with trying to be as tight and as accommodating to trading with all of the customers that have joined to how I would be if it was just me and Hugh, because I would hedge more. I would probably we would maybe take more off quicker or run more further. But it's really interesting when you're posting something that you're trying to protect lots and lots of people that are involved in something, that have all got different account sizes, that have all got different ideas. It's a really weird feeling. That it's frustrating as well as kind of quite liberating and cathartic. It's a weird thing. For me, there's a few trades we've had. Would I have got out earlier? Yes, but I know there's some higher trade costs for other customers. So that's a weird thing for me to get my head around at the moment.
Okay. Well, good luck on that. If you want, let me coach you. Do advise what you would do for yourself to others.
That's every single time.
It's playing with your head. It's playing with your head.
Yeah, it's
because don't worry about leaving money on the table. Here's what I say: you can't expect perfection at the craps table.
Yeah, so true, so true.
Give up trying to be perfect.
Yeah, and that's certainly what we're trying to do. Is that if we're going to do it ourselves, we're going to do it, and we can't have. We can't. If someone's got a small account and they're much more nervous,
just a little advice from an old man, Adam. And when I first started in the business, a veteran pulled me aside and said, "Kid, this is a tough way to make an easy buck," and he was right.
Yeah.
So anyway, just that, because I know, having moderated rooms and facilitated with traders, I used to feel the pressure of I have to find a trade for these people, and you know what? We're paid to wait, and if a trade is compelling, you don't have to scan the screen forever. It'll slap you right in the face. Yeah, and that's very true. And we're new doing this, and I think one of the things that we've really stopped doing is, if there's nothing on the cards, we're not doing it. And my job is to consume the models the same way as I'm consuming my own cash. That's right, buddy.
And that's frustrating for them sometimes, but for us, we put 1 million of my money into the fund that we're putting this trade into. So I kind of think to myself sometimes, there's a guy paying $30 who might not like the way we're doing something, and my wife said to me yesterday, "Why are you so worried about 3 people that might not like what you've done? We've just made 60 grand."
Yeah.
And that's what you've got to. You're right. You've got to stay true to your own thinking and don't change from that. And
yes.
And that's the most important lesson.
The Bible calls wisdom she. All right, true. That's all I'm going to tell you. So start listening to me and her. And Hugh, it really was great. Anything you want to wrap it with and show the people how they could follow up? And
well, I mean, if you just we're on Twitter at macrohedged, macrohedged.com, the website. So feel free to go to that. It's hopefully we've got the 2 products. We are expanding, but this has been really good, Dale. I've really enjoyed it.
You know what? It really was great meeting you. I'm so glad I reached out, and I'm so glad you pressed me to get you in sooner. And you know, I just really believe that if someone wants to learn about options, really, which is a intricate business because you have to know all the Greek, right? So, you know, most Americans could barely speak English. So I have a couple of partners in Greece that would understand theta, gamma, whatever, all delta, all the Greeks, but really can tell that you're a pro, Adam, and like it or not, you're now my trading warrior brother.
That's really good. I've really enjoyed this. There's been some great questions back, and I appreciate that.
And
It's
yeah,
nice,
I hope
to talk to someone that's been in the trenches for a long time and knows the pain and the good side.
May pips rain down on you and your partner and all your subscribers. And let's get back together and keep in touch. Really appreciate you spending your most valuable currency with us today, and that is time, because money comes and goes, and time is gone forever, buddy.
Yeah, absolutely true. Amen to that. Thank you very much.
You're very welcome. Everyone, that's Adam. You want to learn how to trade options? Here's a great resource for you. And you're very welcome, Hamid. Everyone have a great weekend. Remember, you're welcome, Alina. Don't just count your pips, count your blessings. Have a great weekend. Do your work and be ready to execute next week. Adios. Thanks again, Adam.
Cheers.
And we'll see everyone on Monday. Adios.